Good morning or good evening, wherever you're at in the world. Today, we got another great episode of the Coffee Hour where we're going to be discussing a lot of stuff about Bitcoin, some things about MicroStrategy, and kind of just everything that's going on in that space. All right. Well, first off, let me say congratulations to everyone who was able to survive this week. We ended in the green. Thankfully, it was a great reprieve, especially for myself, because I was down about I think $36,000. So now I'm just down about 30. So, very welcome sign. I'm very happy for that, and hopefully we can continue this trend. Don't know what will happen, but we'll see. Let's see. Yo, Cho, we got the sales job, bro. Awesome. Uh, Strategies over spreadsheets, always 100%. So we got a lot to cover about today. For today. Yeah, I was down about 36,000 PMI. But anyways, let me go ahead and get into this, and we could see some of the losses that I've had. I did have to change one of my positions, but I'll cover that towards the end of the stream when I dig into the portfolio, because on yesterday's stream, I did show you guys a position I was in, and then I'm now obviously no longer in that position. So, all right, guys, let's get into this. Okay, so real quick, this is the portfolio as it stands today. Net annual income 47,000. March income supposed to be 4,200 bucks. Dividend yield 10%, right? And then you guys can see down here, these are the portfolio values. Again, nothing too sexy or extravagant about this. All in all, I'm down about 32,000 actually. So I'm still down, still in the red. So hopefully over these next couple of weeks, we can see a little bit of recovery, but I really still predict personally it's going to be choppy. Fridays usually end on green days in my opinion. And there was, again, some good news that did come out, especially with the whole tariff stuff. I haven't really researched into that because there was an article I caught and I wanted to dig into that deeper. So I didn't really catch any of the geopolitical stuff. So anyways, let's move on about what I found. So real quick, guys, I want to give you a quick primer on Bitcoin, okay? Because this stream is going to be very Bitcoin and cryptocurrency heavy, and it'll be all about pretty much MicroStrategy or MicroTragedy, as some are calling it. So this is going to be a very, very heavy stream about Bitcoin, MicroStrategy, not so much Michael Saylor, but I guess Michael Saylor and MicroTragedy or MicroStrategy are one and the same. Whether you love them or hate them, this is what's going on. All right, so here's just a quick primer on Bitcoin, okay? And I just want to show you guys, exactly what the definition of Bitcoin is. What is Bitcoin? Bitcoin is a cryptocurrency, a virtual currency designed to act as money and a form of payment outside of the control of any one person, group, or entity. Okay, it's that last couple of words that I just want you to focus on. Money and a form of payment outside of the control of any one person, group, or entity. Okay, so now that we know what Bitcoin actually is, there was an article I found while I was browsing through the news cycle, just trying to see what happened over the last couple hours, since that's pretty much when I sleep. But Rex shares, they have their own ETFs. We covered them in a previous stream before. They have their own high income cover call ETFs. But Rex creates an ETF for convertible bonds of corporations holding Bitcoin. Okay, and this is rather interesting. Okay, especially since there was other companies that held Bitcoin, not just MicroStrategy, which I thought was very fascinating. First, Bitcoin enthusiasts could buy Bitcoin. I hope you guys can see this. Could buy Bitcoin. Then they could invest in stocks of crypto-linked companies such as Coinbase and miners such as Riot Platforms. Then came Strategy, formerly called MicroStrategy, which started piling Bitcoin onto its balance sheet. To help pay for that, the company issued new stock and convertible bonds, giving investors another Bitcoin proxy. Other companies followed. So in case, you guys are all new to this or MicroStrategy or, Bitcoin in general, essentially MicroStrategy, headed by Michael Saylor, it was a software company, still is. But they started buying up Bitcoin like crazy, right? They've just been putting Bitcoin on their balance sheet for what feels like, years and years and years. I think they've been doing it for about 5 to 8 years, if I'm not mistaken. But they've been buying Bitcoin for a very long time. And, some people called him a clown, said he's stupid, this is dumb, and then others are saying it's a genius move. He's really intelligent, yada, yada, yada. Whichever camp you're in, doesn't matter, to be honest. But anyways, so he started putting Bitcoin on his balance sheet, on the company's balance sheet, right? And now MicroStrategy, now renamed to Strategy, is a Bitcoin treasury, right? It's a Bitcoin treasury company. And what this allows is for other institutions, funds, companies, institutional investors to basically invest by proxy into Bitcoin through Strategy or MicroStrategy, right? So that was a proxy on how they can invest into Bitcoin without directly investing into Bitcoin, because what a lot of these institutions, they have this charter of some sort, and it basically prevents them from buying cryptocurrency directly. So they have to go an alternate route. So MicroStrategy saw that in the market, and this is how, their share price has been able to basically survive and mimic Bitcoin 1-to-1 almost. So now the Rex Bitcoin Corporate Treasury Convertible Bond ETF, BMAX, launched on Friday, offers a way to invest in convertible bonds of companies that hold Bitcoin on their balance sheets, an asset that has been difficult for individual investors to access, Rex said. BMAX removes those barriers, making it easier to invest in the strategy, pioneered by Michael Saylor, leveraging corporate debt to acquire Bitcoin as a treasury asset. Said Greg King, CEO of Rex Financial. By investing in these convertible bonds, BMAX seeks to provide a blend of debt stability and equity upside. Rex said investors gain exposure to companies leveraging Bitcoin in their treasury strategy while benefiting from the structural advantages of convertible bonds. So what does all this mean? I know this is probably going to be a little bit of a word salad, all right? So essentially, strategy... They came out with bonds, right? They came out with bonds. We're going to cover all this in a minute. And this allowed institutional investors to basically invest in those bonds, which was a direct or an indirect way of investing into Bitcoin. Strategy, it didn't matter how they got a hold of money, whether it was through their software sales or through their share price. They were using all that money to basically acquire Bitcoin, right? Corporate debt, things like that. Investing in these convertible bonds, BMAX seeks to provide a blend of debt stability. So meaning that when you invest in bonds, typically it's very stable. I don't have a chart up. Let me see if I can pull a chart up real quick and just show you guys what I mean by this whole bond stuff. So we'll do Google USA. Yeah, this is, I should have had this ready for you guys. But let's look at BND, right? BND is the Vanguard Total Bond Market Index Fund. But if we look at the max, it's not crazy. Look at the actual returns, right? And this is usually returned whatever the interest rate currently was at the time. But this has actually been a fairly stable asset, right? Over almost 2 decades, since 2007, since its inception, it's been a fairly stable asset. And what this provides investors is, wealth preservation, right? They're not going to be, they're not going to suffer really from the market volatility, ups and downs, ebbs and flows. They're not really going to suffer from that. So that's essentially what bonds are, right? And this is what debt stability is. It's just bonds, right? And equity upside. So they're saying this equity upside is going to come from the price of Bitcoin, right? The price of Bitcoin rising. Rex said investors gain exposure to companies leveraging Bitcoin in their treasury. Okay, so now that we got all this out of the way, let's take a look at strategy. This, in case, again, I just got to, for any new viewers, people watching the stream out there, we are the world's first and largest Bitcoin treasury company and the largest independent publicly traded business intelligence company. Now, their publicly traded intelligence company is kind of a joke, because I swear if this was a mafia style business, this would be a front, because this company makes no money whatsoever. The way that they're staying afloat, honestly, is because of, let me see, I gotta make this bigger. The way they're staying afloat, honestly, is because of Bitcoin. That's it. They have not really made any type of revenue almost at all. and they've just been constantly going down, right? Constantly going down. But they use a lot of this money, and maybe that's the reason why, but they keep using a lot of this money to go buy Bitcoin. So any way they can get their hands on Bitcoin, they're going to go buy Bitcoin. All right. Not too long ago, Strategy announced Strike, STRK. This is a ticker, okay? This is a ticker that you can actually go out and buy through a brokerage. It's called At the Money Program, or ATM. So this happened 5 days ago, or 4 days ago. Today announced, Strategy today announced that it has entered into a sales agreement pursuant to Strategy, to which Strategy may issue and sell shares of its 8% yielding Series A perpetual strike price preferred stock. All right. Having an aggregate offering price of $210 billion, or I'm sorry, $21 billion, the ATM program, shares of the perpetual strike preferred stock are convertible by the holders into shares of Strategy's Class A common stock. All right, Strategy intends to use the net proceeds from the ATM program for general corporate purposes, including the acquisition of Bitcoin and working capital. All right. There was some talk on this stream where we said that Strategy would probably be in the news a lot, right? Especially if Bitcoin's price started to tank. That hasn't come to fruition yet. I think it probably won't be too far off in the future, to be honest, especially, depending on how this next couple of months play out, because there's still the whole talk of high inflation, a lingering recession, and all this stuff. I mean, I'm of the camp personally that we may not be heading into a recession, because this is not like what's happening is not related to unexpected events like 2008, 2009. This is basically administration made, right? This is man-made, a man-made kind of drop in the stock market. So I don't know if this is going to be a recession. I have no idea, but I'm just of the camp that it's not. Anyways, back to this. So what does all this mean, right? What does all this mean? We have Strategy announcing a $21 billion strike at the money market program. So I tried to actually figure out all of this stuff before the stream, but I couldn't really come up with a way that's going to make it easier for you guys to understand. So I found a YouTube video that's actually pretty decent that explains all of this. So we're just going to look at this. And this creator is from Blockware YouTube channel. You guys can subscribe to him if you want, but all credit and all rights are for him. So real quick.
And all that, let's take a look at Strike, which is the new product they just launched, which is preferred stock. And this has a very interesting profile as a financial asset. First, 8% dividend.
We gotta hurry this up.
This is a dividend paying preferred stock. Now, the 8% may vary based on the actual acquisition price. This 8% is based on a liquidation price of $100 per share, which I won't bore you with the technical details, but just understand this is fixed income and it's paying a dividend. What makes this really fascinating is that this has a perpetual call option embedded into it. Now, the difference between a perpetual call.
So if you buy Strike, which is available on brokerages, right? You could buy this on Robinhood, you could buy this through M1 Finance, whatever. If you're going to get a 8% dividend, okay, that's pretty attractive for a lot of people, right? And these shares are geared towards retail investors because, again, if we go back to Strategy and we look at Strategy's website, we see that they have all these convertible notes, all these debts, all these bonds, whatever you want to call them, right? They have all this, but this is only available to institutions. This is not available to you or I as these, low retail investors, right? This is Strike. This is the actual stock you can buy, and it offers an 8% dividend. So we're going to go back to this and just hear what it's all about and how it actually all works. Because honestly, this is pretty fascinating.
Call option and the traditional call option is that there's no expiration date. That's what makes this so valuable, because with the standard call option, if the stock price doesn't reach your strike price on your option before the expiration date, then the option is essentially worthless. It expires having no value, because if your conversion price is higher than the actual stock price, it's worthless. And so the fact that there's an expiration date presents risk. If the stock doesn't go over that price before the expiration of the option, you're SOL. But with a perpetual call option, you always have the ability to turn one share of Strike into 0.1 share of mstr at $1,000 per share. So if at any point in the future, whether it's 1 year from now, 10 years from now, 100 years from now, if MicroStrategy common stock goes above $1,000 per share, you can convert every 10 shares of Strike into 1 share of MicroStrategy. Now let's slow down here because I know this may be a lot to digest, and let's look at some of the data and charts from Michael Saylor himself. Now let's look here at a chart that comes from the man himself.
All right, this is what's going to be really crazy, okay? Because again, did I close that window? I totally did. No. So these are bonds, okay? This is a bond. You notice that it doesn't really like increase crazy in value. Like it's not gonna spike like a Facebook stock or a tech stock or anything like that, right? Or even Bitcoin. It's not going to increase that much in value, right? It's just going to be paying out a stable dividend. I mean, even look at this from 2007 to 2020, it was only a 20% return. Okay, on top of whatever dividend payouts. I mean, that's not a whole lot, to be honest, to be perfectly honest with you guys. So this is what makes Strike so crazy. And I'm going to get into the rec share piece in just a moment, all right? Just bear with me, guys. I want to give you a lot of this background information so you guys understand this stuff.
Michael Saylor. This is comparing Strike, the preferred stock, to MicroStrategy's existing convertible notes. And alongside the fact that this is a perpetual option, it has no expiration date. This also has unlimited upside potential, unlike the past convertible notes, which have what is.
So remember, these were the other convertible notes that we found here under debt. This is what the institutions were buying, okay? And now they came out with Strike, which has unlimited, uncapped upside for, because it's basically going to be tied to MicroStrategy's price, which MicroStrategy's price is tied to Bitcoin.
It's called a provisional call price. So this means if the shares of MicroStrategy go beyond the provisional call price, MicroStrategy can automatically redeem those call options on behalf of the note investors, essentially capping their upside opportunity. Now, they still have way more upside opportunity, more upside exposure to Bitcoin than they would if they didn't have any Bitcoin exposure at all, but it is limited. Versus with the preferred stock, Strike, it is uncapped. There is no provisional call price. So this is the big idea here, right? With the preferred stock, your upside is not limited by time, nor is it limited by the share price. At any price of the mstr common stock, and at any time in the future, you can convert your perpetual call option, that is Strike, into mstr stock. And this is insane. It is fixed income Bitcoin exposure with unlimited call option upside on the biggest Bitcoin treasury company in the world.
All right. So yeah, basically that is what's so attractive about Strike. Okay. That's what's so crazy about Strike is that let's just call it a stock, right? It is a stock with unlimited upside potential, paying out an 8% dividend yield, right? That's almost treated like a bond. Like there's almost no downside to this, right? It's really attractive. I'm not saying go out and start buying this stuff. All right. But what I'm saying is that this is just wild. Like this, I think can probably lend, there's probably smarter people out there, but this could probably be a big problem, in my opinion, for Bitcoin or MicroStrategy, right? And the reason is because it's going to overinflate, and if there's a drop in Bitcoin price, it's going to crush MicroStrategy. I think it's going to crush them, and whoever's investing into Strike or whoever's investing into mstr or those convertible bonds, I think that could topple Bitcoin, because again, Bitcoin is not supposed to be owned by any one entity or government institution or anyone, right? But all these places, all these companies, all these governments that are just stacking and stacking and stacking Bitcoin, I think it's probably going to lead eventually to maybe something like a Bitcoin bubble. I don't know if that's far-fetched or if that's way out there, or if that doesn't even make any sense. It's just a thought, right? It's just a thought. But again, Strike, pretty interesting, right? Pretty interesting. It has the characteristics of a bond with a preferred dividend yield of 8%, which again is pretty attractive. It's higher than most dividend paying stocks. And you're going to get uncapped upside potential. Like there's nothing truly wrong with this particular thing, right? With this particular, stock. So anyways, moving on. So this is, like I said, this is Strike. This is MSTR's price. Again, it usually follows the price action of Bitcoin, right? So if we look at this, we can see that, over the last, over the last month, it's been dipping like crazy because Bitcoin's been going down like crazy. And then if you zoom out a bit, this pretty much follows Bitcoin, right? This pretty much follows Bitcoin. All right, so that's that. This is Strike. Now, this is the preferred shares that you can purchase on Robinhood or M1 Finance, Webull, Fidelity, Vanguard, Schwab, right? A little different. Obviously, this is only a couple of days old. It's not that old, right? But you can buy this, and this is available. All right, so now comes BMAX. Okay, here comes BMAX. And we heard that, Michael Saylor was looking for ways to basically raise as much money as he can to invest into Bitcoin, right? But at the time, this was not available to retail investors. You cannot invest in these, right? And a lot of institutions are putting their money in this, right? When you hear that institutions are buying this stuff and it's very favorable, then it just kind of makes you excited, right? You're like, oh man, I wish I could invest in these things, right? If the big dogs are putting their money in it, then there's got to be some merit to that. Well, here comes BMAX. BMAX actually, and I'm just going to skip a lot of this. We'll go back to it, but BMAX holds all of these convertible notes, as well as Mara. I didn't know Mara had Bitcoin on their balance sheet. I mean, I don't follow them at all, but it was just surprising to know that there's other companies out there that have, a similar structure, that have, convertible notes, convertible bonds, right? So here comes BMAX, and they offer this new ETF that allows you to invest in companies like invest in companies like Strategy convertible notes. So you now have access to this stuff. So let's just take a quick look at what is actually being offered here. Sorry guys, if you guys can't see that. Let me see if I can make it a little bigger. Okay. All right. So the BMAX approach, the game has changed. Corporate treasuries are evolving and public companies are now using convertible bonds to stack Bitcoin on their balance sheets. Once reserved for Wall Street's elite, these are now available to all via ETFs. BMAX strategically focuses on entities like Strategy, a prominent issuer of Bitcoin treasury convertible bonds. This focus allows the fund to leverage the burgeoning market dynamics where digital asset strategies intersect with traditional finance. And then this is, why, what the investment process looks like. They issue convertible bonds, then you can get income, and then you have maturity options. Maturity options is when, basically the bond is matured in value, or not matured in value, but it's basically matured, and they can pay out. So they give you essentially two options here. If the stock's market price is above the conversion price, the bond can be converted into shares. Aligning investor returns with the equity's appreciation, i.e. if the shares of mstr are higher than the convertible note, then the note is going to be converted into mstr shares, okay? Or if the stock's price is below the conversion price, investors are repaid the principal, hedging their investment against market volatility. This is what is so attractive. There's no downside risk. Zero downside risk. Let me say that one more time. Zero downside risk when you invest into these debt instruments, okay? Because what they're going to do is just pay you back the money that you invested into it, or at least pay back the institutions, that invested into this. So this is pretty much what, the whole idea behind these notes are and how they work, is that you can invest in them, and you're basically hedging your bet. You're going to be collecting some type of, income, some type of interest. And then whenever, these come due, you, as the investor, if the price of MSTR has skyrocketed, then your notes, are going to get turned into those shares, right? Which, you can see a huge gain over, the next couple of years. However, if MSTR's price, Bitcoin, goes down in value and it's lower than what you bought these convertible notes at, then you'll just get your money back, right? You didn't lose anything, and you probably collect a little bit of interest along the way. So this is what is making this very, very attractive, right? And this is giving retail investors access to institutional quality debt, right? This is what is making this particular ETF very, very cool. So anyways, just more stuff about this. It does have kind of a higher expense ratio, 1.14%. The NAV right now is $24.78. Again, we don't really care about most of this stuff. This is what we care about. Some more information. BMAX features. Unlocking convertible bonds used to buy Bitcoin. BMAX unlocks a market typically out of reach for retail investors, providing exposure to convertible bonds issued by companies to purchase Bitcoin for their treasury, a unique blend of debt stability and equity upside. Convertible bonds combine the potential of security of fixed income, right, with that whole 8% stuff, with the potential for stock appreciation to stocks active in Bitcoin, offering a less volatile, more balanced approach to risk and growth. Broad, simplified exposure in one ETF. BMAX consolidates multiple convertible bond issuances, making it easy to invest in companies leveraging this strategy, all within a single actively managed fund. I will not be surprised if GameStop starts doing this as well. If you if you start seeing GameStop on here, I think we probably entered the tulip craze or something. Anyways, why invest in convertible debt? Convertible bonds are hybrid securities that offer interest payments. Think of interest payments as like a dividend yield and the potential for equity upside. The convertible bond seeks to offer interest yields during the bond's life with an option to convert into stock if the issuing company's share price exceeds a set conversion threshold at maturity. I know this is a word salad for a lot of people, including myself. Just bear with me. This dual benefit structure makes convertible bonds a dynamic play, offering slight exposure into Bitcoin while maintaining a foothold in traditional securities. So basically, you're getting the best of both worlds, right? You get the best of the protection of bonds or, debt, and you're going to be able to capture upside as well as interest or dividend yields. Like, this is really a cool instrument in my honest opinion. And then we go over the holdings, performance, and that's that. All right, so that was a lot to cover, guys. I think this BMAX stuff, I don't plan to open a position in this, to be honest, just to be transparent right now. I have no intention of opening a position in BMAX. I just think it's really, really cool. This is by far, in my opinion, if I did not know about cover call ETFs or high income investing, this would probably be the next best thing, in my opinion. Because, you can invest in REITs, you can invest in BDCs, you can invest in CLOs, you can invest in, maybe just regular dividend paying aristocrat, ETFs or companies. But this is what makes this really interesting is the fact that there's downside protection. With REITs, BDCs, bonds and all that other stuff, with bonds, you're not really going to be able to capture that upside, right? It's going to move a little bit up every single year. You're going to get the dividend, but it's more of a wealth preservation type of play, right? It's a very stable asset class. However, there's almost no upside. As I just showed you with bonds, you had almost 20 years and it's only returned 20%, right? Not all that attractive. But with BMAX, you can get unlimited upside potential with Bitcoin essentially, right? Usually it's investing in MSTR shares, but MSTR shares are tied to Bitcoin. All right, so this is, like I said, this is just an interesting thing. For those who might want to look into it more, I'll have all the links to everything down below in the show notes once the stream concludes. All right, so I'm going to start going over how the market did, and then we'll move into the portfolio stuff, and then we'll call it a stream. All right, so real quick, guys. The S&P 500, obviously we ended in the green, thank God, because over the last couple of days, it's just been brutalized, right? We were just trending down. All hope was lost. Everyone's worried. Everyone's cashing out. Everyone's flocking to safety. It was just real bad these last couple of days. Luckily, we got a little bit of a reprieve. So hopefully we can keep up. Hopefully Monday we'll see greener days. Again, I don't think this is the end because again, we have April 2nd that's coming up, or April 1st, whatever. No, it's April 2nd, excuse me, because then so basically the Trump administration or Donald Trump was on record saying that he didn't want to do the tariffs on April 1st because he didn't want the world thinking it was a joke, right? Like, he actually said this. I thought it was kind of funny, but he chose April 2nd, and he just did what did he do? He just did an interview with the Netherlands Prime Minister, if I'm not mistaken, or something like that. He did this interview recently, and he was saying that he is still going to move forward with all the tariffs. Now, there was some news that just broke. I didn't cover it, but there was some news that just broke about Canada reaching a agreement with the United States. So we'll see what what comes of that. We'll see, on Monday, probably more about what they spoke about and whether the market's going to turn green even more. So we'll see. I still haven't seen anything regarding Mexico or any agreements there. So I think there's still more in the air. And then there's still all the tariff tit for tat trade war going on between the United States and China and the United States and now the European Union. So it's crazy out there, guys. It's crazy out there. So anyways, S&P 500, we're doing good. This, again, was a welcome because I was down $36,000. It hurt like hell. So hopefully we'll be able to see greener days. NASDAQ 100, again, up for the day, 2.49%. Bitcoin actually went up. So as you guys saw, or some of you guys saw probably yesterday, I was in a short position. I was in SBIT. I think that's the ticker, SBIT, the ProShares Ultra Short Bitcoin ETF. And obviously I had to get the hell out because I was losing money like crazy. I was down 7%, which is about $700. And I'm glad I got out. It is what it is, yeah, I made a bad call. I thought the price was going to continue going down. I did not bet on news breaking that Cathie Wood's ARK purchased a ton of Bitcoin and then BlackRock purchased a ton of Bitcoin. So I really think that, kind of lent to this uptick right here. I think that lent to its uptick. Again, information and news is everything when it comes to these cryptocurrencies. There's no balance sheet. There's no company behind them. There's nothing. It's just speculation. So when you see the big players, the big institutions, the big dogs buying Bitcoin or buying anything, then, it kind of warrants further investigation and or further research. And, when I finally understood that these guys were buying, I was like, crap, it was already too late. I held the ETF overnight, which I'll never do again. Again, these are one of those mistakes you learn and you just won't repeat it. So if I do ever enter into a short or long position with these ETFs, it's probably going to just be for the day, for the trading day, and then I'll get out. So I tried to actually recover some of my money. And then I ended up just cashing out. I wish I actually took a long position right here, but even then, even if I took a ultra long position, which would be like a 2x leveraged position, I still wouldn't have made my money back. And again, it's just so volatile that I was already sick of losing money, so I just cashed out and I called it a day. So it is what it is, guys. This is the way of the markets. All right. So gold, still the best performing asset year to date. Saw a huge little bit of an outflow actually from gold, but still up 12% year to date. So it's still the best performing asset year to date. Gold, I believe, breached $3,000 an ounce or something like that the last time I read. So for anyone that has gold jewelry or gold bars or whatever, congratulations, you guys are probably well on your way to being multimillionaires in gold. So 10-year treasury. Again, we use this as a barometer for mortgage rates. We use this as a barometer for the real estate market, for REITs specifically. So just want to check it in. Obviously, we've been going up, and this is mostly due to the whole tariff fear, right? So we've been going up, which is a total bummer because we were trending down for a very decent amount of time. We were trending down pretty much at the beginning or March 10th, right? But it looks like we've been on the uptrend. So we're still down over the last month, and then it's definitely over the last 6 months we're down, right? So we're doing okay there. Treasuries are increasing, though, because there's a fear of inflation. So U.S. Treasuries yields rose on Friday as investors digested new consumer sentiment data that points to greater inflation expectations. All right, it's all about expectations. It's all about the future. So whenever we talk about the stock market, where the price could be and all that stuff, there's tons of prevailing thoughts. Price is always baked into the price of the stock or into the stock market, right? It's always forward looking, right? The stock market is always forward looking. The same thing could be said for bonds. The same thing could be said for treasuries, for anything, right? It's already baked in. There's investors who already bake it in, right? That's why there's always these ups and downs, these volatility, these price movements every single day, because people are basically voting what's going to happen in the future. So right now, investors are voting that, there's going to be inflation in the future. We do have, actually, let me cover this real fast. So V&Q, the Vanguard Real Estate Index Fund ETF saw a 2% increase, which is awesome because, you know, again, I am invested in a ton of REITs and they were starting to trend downward, which is a little worrisome. But again, you know, I have enough buffer to protect myself, and in both of my portfolios, whether it's the cover call ETF portfolio for high income or it's the REIT ETF or the REIT portfolio that I have on M1 Finance, right? I still have a ton of buffer to protect myself. So for next week, this is going to be the big one. Wednesday, March 19th, mark your calendars. This is going to be the FOMC interest rate decision. Now, my prediction is that they're not going to raise interest rates, but what I want to hear is what Jerome Powell has to say, okay? Because that is going to be more important than anything. Is he going to take another dovish stance, or is he going to take another hawkish stance, or is he going to be indifferent and just say we're taking a wait and see? It's important to hear what he has to say because he would know more than anyone else, you know, how the economy is doing, right? How the economy is doing and whether they want to lower interest rates or not. You know, there's again another thought out there that this whole idea of tariffs and bringing, you know, onshoring back, bringing companies back in the United States and to force them to basically build factories and all this stuff is going to be for the good of the country. There's also, you know, the possibility of corporate debt that is, you know, extremely high because of the interest rates of, you know, last year and the year before. So all this corporate debt needs to get refinanced. So hopefully once, you know, the Federal Reserve, if it's pressured enough, you know, if a recession is looming, if the economy is starting to stall, if the economy is going down, that they will, you know, lower interest rates so all these corporations can refinance their debt, which will create more jobs, yada, 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 right? You guys know the rest of the story. But I'm really interested to hear what he has to say. Again, I don't think we're going to see any rate cuts until June, but we'll see. Back in December, January, and February, you know, the Fed has been taking a very kind of neutral stance on everything, and they're taking a wait and see approach. They just want to see how all this tariff talk is going to play out. Jerome Powell did say, and he is on record for saying that tariffs historically have not lent themselves to inflation, have not actually increased inflation, as they've always been short term. So again, we will see what all this, you know, what comes of all of this in the future. All right, so got through all that news segment. All right, the entire news segment. Hope you guys got a lot of value. Let's take a look at the portfolio stuff. All right, so this is my Robinhood account. Obviously, I am in the green. Let me see if I can increase this for you guys. All right, so I'm in the green, thankfully. I was down to like 82,000, 84,000 the other day. So it's nice to see that I'm above 90 again. So I'm just waiting for this, you know, again, just to play out. My positions still remain the same. Again, you guys saw SBIT yesterday, and I since cleared out of that. Let me get out of that. Yeah, I was looking at qdtes earlier today. But I still maintain my positions in Ethereum's cover call ETF from Roundhill, XDTE, XPay, and PLTW, which is a weekly pair from Roundhill. Now, real quick, I don't plan to hold PLTW long term. Again, this is my momentum player. This is something I plan just to hold until the price of Palantir probably returns to its all-time highs, and then I'll cash out and then use that money for something else. So don't know what that is yet. Of course, you know, meanwhile, I can make some decent income, at least from the dividend. Nothing exciting, but, you know, something is better than nothing. I could have taken a 2x leverage position, but I didn't want to. Instead, I chose for the 1.2x leverage position with, you know, income. So I like that. But, you know, maybe I should have taken a definitely, you know, something like PLTU, if I'm not mistaken, PLTU. Let's see if this comes up. Yeah, so this is the leverage position. This is the bull 2x share. So this is a super leverage position. So maybe I should have taken this instead of PLTW, since I'm still very bullish on Palantir, but I don't want to do that right now. Don't want to cash out of PLTW right now. So that will do it pretty much for this stream, guys. Actually, I still have to cover my M1 Finance portfolio. Let me log in here. It always logs me out. crazy. I keep forgetting that my keys are tagged with my camera. Okay. Close this, close that. All right, cool. So as you guys know, this is the actual like live portfolio. This isn't like, you know, a screenshot or anything. So just want to go over this real fast. So my reach, they've recovered a little bit. We're up to almost 7%. VGT still down bad. I'm still down $20,000. Again, when I started this position, it was at $170,000. So I'm still down pretty bad. But, you know, I think it'll recover. I know it'll recover over time. I'm of the camp that this is just short-term volatility. Once we get through these tariff pains and, you know, all this you know, geopolitical stuff and all this trade war stuff, once we get through all of this, you know, crap, probably after June, I believe that VGT will not only recover, but it'll continue to grow. Again, we are still scratching the surface for AI, and AI, you know, basically the AI play. We're barely scratching the surface. Technology is only getting better. The software is only getting better. And eventually there will be more segmented sectors within AI, artificial intelligence. There will be, you know, defense sector, healthcare. There will be probably agriculture. There'll be commercial, you know, for not only businesses, but for people like you and I, just end users. Maybe at some point everyone will just be talking to chat bots, right, on their phones. I have no idea. But again, I really think we're just scratching the surface here. So I want, you know, I chose to go with VGT because I believe, one, it's not going to, like, I don't have to pick and choose the companies myself. The ETF, the index that it follows is just going to pick them for me. So I'm always going to be exposed to all the best technology companies in the tech sector. And then crypto ETF, nothing exciting there. BDCs, nothing exciting there. So that'll do it for the portfolio updates, guys. That'll do it for this stream. And just taking a quick look. Let me just scroll back here. Just taking a quick look. Not too many comments. So, I mean, that's it, guys. I got nothing else for you. This is a short stream, and it is Friday night for you guys. I'm sure you guys are out having a blast. Hopefully you're not at the bar watching this. But, you know, real quick, let's see. PMI says cash heavy. Yep, absolutely. Well, not cash heavy because all this cash is invested. So not entirely cash heavy. Senpai Steven says I started to run out of buffer too. Yeah. I was getting a little worried. I'm not going to lie. I'm still, you know, I was still fairly safe when it comes to buffer. You know, especially in this portfolio, even in my M1 finance portfolio, I have like $100 and something thousand, $130,000 worth of buffer. But still, you know, it does make your butt clench a little bit when you start to see this go down a lot in value. And these little short-term, you know, $10,000 plays I was making just lowered the buffer down to like $24,000, $22,000. So again, I had to be real careful, make sure that, you know, I didn't overextend myself or lose too much money. I did get paid some dividends. I'll be making a video about dividends in the future and all the dividend income I made for March, but that video will come much later. All right, guys. So that'll do it for this stream. I don't have anything else for you guys. I hope you enjoyed all the information. I'm going to get ready for the gym. I will see you guys in the next stream. You guys have a great night, a great weekend, and try not to lose, you know, your shirt on your back. All right. Don't be doing anything silly with your money. All right. I will see you guys on Monday.